This is a tutorial on intraday charting, so you learn how to look at a 5-minute chart and learn where to buy. This is the S&P 500 ETF. You see since January 1st in this year, 2013, the trend is up. So you're going to want to try to find a stock that is going up faster than the S&P 500, which is alpha, and going up on high volume. BRLI today broke out. It's called Bioreference Laboratory. It's about a $900 million company that should continue to go up fairly quickly from here. As you can see, it had a resistance at $30 a share, and we had a lot of volume today. We had really low volume, about 140,000 shares in the previous week. Today we had 579,000, and it broke above $30 a share. It closed at $31. What you're going to want to do is try to buy obviously as low as possible on the breakout day, and you're never going to want to lose more than 2% on any trade. So if you look right down here, about $29.80, that's where you'd want to get out. So 2% above that would be $30.40 range. That's where you're going to want to buy. $30.30, $30.40, as cheap as possible, but somewhere in that range. So if you do, the trade does go against you, the most you're going to lose is 60 cents, which is 2%. So if you look at the 5-minute chart right here of Bioreference Laboratories, you'll see all the way on the left, this is 8:30 in the morning Central Time, or 9:30 when the bell rings in New York. It started at $30.09. So it finally broke that resistance of $30. But you're not going to want to buy it right away, because I've seen a lot of times where there's no volume, it opens above the resistance price, and it just falls right back down to the old range. You're going to want to wait around a half an hour and check the volume. So you'll see it shot right up all the way on the left over here to $31.09. Shot up really quick, came right back down. A lot of sellers in the first 5 minutes. Then it kind of chilled out here for the next half an hour to an hour. And like I said, you're going to want to buy around $30.30 to $30.40, so you only lose 2% maximum. And you can see it came back down to our range right over here in this area. You look all the way over to the right, it says $30.35. Anywhere in this range is where you're going to want to buy and throw a lot of money at it. And if it goes below $30, you only lose 1%, 1.5%, 2% maximum though. So what you're going to want to do throughout the day is draw trend lines. Trend lines right here, you'll connect the bottom, all the way on the bottom left of the chart, the low of the day, and keep going upwards. And follow it. If it ever breaks below the trend line, you should get a little bit worried, and just keep following it and see what happens. Right here it fell below the trend line. Nothing really too much to worry about, because if you look down at the bottom, not much volume on that bar. On that 5-minute bar, there was only 2,000 shares sold. No one really cares if it's just a little bit and there's not much volume. You can see 10 minutes later, 2 bars over, we had 65,000 shares traded, and it broke to a new high today. Not the first 5 minutes, doesn't count. This is a new high right over here at 11:55 a.m. New York Eastern Time. We had a new high, 65,000 shares times $30. That's about $2 million some hedge fund or mutual fund threw at it. So you probably don't have to worry at that point. You just set your stop loss for anywhere below $30, wherever you feel comfortable with your risk. Set it for there and walk away and go away for the day and have fun. You're probably going to make a lot more money throughout the day, or the next weeks. You're probably going to make some money. So after you see the $2 million, you don't have to worry. So it continues to go higher. You can see right here, though, the next time you have to worry, if you are watching it all day, is right here at 14:15. That's 2:15 p.m. Eastern Time. You'll see 24,000 shares. If you look down at the bottom, big volume bar, 24,000 shares were traded. Times $30, that's about $750,000. Some fund or a big investor just pulled their money out. They wanted to get out. They saw a pop. They wanted to get out and take their $750,000 away. You should worry a little bit about that, but you're not going to sell. Just it should concern you, because it broke the trend line. It stopped going up. It kind of went sideways for a while, and some big investor pulled their money out. So what you're going to want to do is right here, click on Draw and click on Fibonacci Retracement. Connect the high of the day to the low of the day. The next thing you should worry about if it breaks the trend line is the Fibonacci retracements. Over here on the left, you'll see 78.6%. That's the upper range of the Fibonacci lines that are going across the screen. I consider this to be really nice when it stays above it throughout the whole day on a breakout day. You'll see it fell down here. The upper range is $30.91. It never really falls below it much, maybe a couple cents, but it never really falls below it much. There's not much volume when it does go below $30.90. So it looks pretty good throughout the whole day. And you'll see at the end of the day a lot of volume comes in. This is definitely a stock that you're going to want to hold for a long period of time, and this is what you're looking for on a breakout, and this is what you look for when you're doing intraday charting. You can draw trend lines up or down if you're worried about getting out of a stock. If you start seeing every time it rises that people start selling into it, then you're going to want to get out. If you see like this, where every time it drops a little bit people buy, you're going to want to stay in. So draw some trend lines, draw Fibonacci retracements from the high to the low, and try to have it stay above at least the 50% line right here. 50%, so it's over here on the left. At least have it stay above that. The last thing you have to know about intraday charting is VWAP. Right over here on the top left it says VWAP. That stands for volume weighted average price. That means we're taking the average price of the stock traded throughout the day, and it includes volume. So this big volume bar right here, that's going to be a lot more shares traded at that price. And what it does then, it just smooths out that average, and it draws a little red line right here. And you'll see right here when it fell below VWAP right here, it kind of had resistance. And then it busted through it, and you know what happens the rest of the day. It just continues to go up. But you'll see a lot of other stocks at VWAP where it'll come back down, and you should buy. If it fell back down to here, around $30.68 right here, you would want to buy. It never came down to that. So at the end of the day, you see all these big institutions coming in with this large volume and buying because they never had a chance for it to get down to VWAP, the average price of the day. They had to buy high, and that's always your strategy, is to buy high and sell higher. Wait for breakouts, wait for volume, and then watch it throughout the day and make sure it doesn't just roll over and it is a false breakout and it falls below $30. This one closed at $31.05, so it's obviously a great stock to own.